Teddy Keckstead from Forex Trading Unlocked, and welcome to our weekly Forex market analysis and cryptocurrency trading analysis for you for the week of June 27th to July 1st. Can you believe it? We have a holiday weekend coming up ahead of us. I want to show you our disclaimer real quick to remind you that this is for illustrative and educational purposes only. This webinar is in somewhat of a delay, so please remember that this is just for information only. All right, and with that, we are going to now give you one quick little all right, if you haven't done so already, please hit that subscribe button on YouTube or on Twitch, and also hit the like and share, if you will, also this video out there. It helps us with the algorithms, and we really would appreciate it as well. All right, so with that, we are now going to go to our live action screen here, and we have the forex-trading-unlocked.com website pulled up. And for any of you that are joining us on Twitch or on Discord or on YouTube, please make sure to jump in and join us on the chat, if you will. We would really appreciate that. If you got any questions about the markets that we're talking about as we go along, please do participate, and we will be more than welcome to talk about any of the different, if you got some exotic pairs or whatever, and even cryptos. So, all right, so with that being said, we just hit a little tweet out there to help push out the thing. All right, so we have the forex-trading-unlocked.com website pulled up already, and we have the workstation page up prepared for you. We're going to skip past the numbers and stuff like that, and we're going to take a look at what was going on with the dollar index. As you can see, last week the dollar index was winding its coil, and boy oh boy, it was just a disappointment in a lot of the currency crosses, a lot of divergence. Market was just trending nowhere. We had a lot of extremes being buffered in different markets. All of them, for the most part, were corrective. Excuse me. Excuse me. Sorry about sneezing on this. Anyhow, they were corrective moves. At least that's the way we're viewing it. Remember, the overall trend is we have a bull for the U.S. dollar index and the U.S. dollar versus many of the crosses around there. Very interestingly enough, we have a lot of interesting geopolitical things shaping up that are coming to a head, especially tomorrow with the gold markets. When it comes to, we have another issue with the Russian sanctions on the Ukraine and stuff like that, with on Russia because of the Russian-Ukrainian conflict, and that are coming to a head. And it's definitely showing how what certain countries over the course of the past decade, especially by acquiring gold, what that means for them, and also for the gold markets too, and the currency markets. So right now the dollar is king. It's only because of the weakness in so many other currencies. It's not because the dollar is strong. Be mindful of that, please. Please make sure that you're watching out for that. All right. All right, thank you for those couple likes there on YouTube, and definitely make sure you leave some comments on the video section, and also, or in the comment section and on the chat. Also jump in and ask us questions. All right, so we have the market, the dollar index has been winding its coil. We bounced off of key corrective support right here in this little area here. I don't think that if we do start to see dollar weakness that we will fall below this downward, or upward sloping trend line, keeping the channel intact. I believe this corrective support zone will find enough of strength to hold the market up, and then boom, give us a chance to rally back up and challenge critical resistance. So let's see what's going on right now. So overnight the dollar was taking a little bit of heat. I don't know how many of you are watching from the US or if you're watching from other countries around the globe. And let's see. All right, here we go. All right, so we have the euro US dollar. All right, sell rally forecast. Today we probed higher move highs on the day from Friday's trading. Had a little follow through from the up move. Once again, we're back into this critical upside breakout area. We've been bouncing around. We probed this the third time into this area. We have this downward sloping resistance line keeping the channel intact. I think that this is really where we're seeing the last stand. This is where we're going to see the market start to turn off, because the euro has all these factors that are just not going for it. For instance, bearish influences on the euro US dollar. The ECB is out of bullets. It just doesn't have the potential strength to carry on any true economic platform to try and bail out the euro, let alone the debt market there. They're trying, and you can see that the quantitative easing, and then also especially with the COVID restrictions and the forced lockdowns, how that hit the economy, and now followed up as they were trying to come out of all this, that well, you've had so many lockdowns. Basically, Europe was locked down for 2 years, especially Germany, one of the biggest powerhouses for manufacturing. And well, now you have a war in the Ukraine where they put sanctions that actually impact all of them as well. So where you're trying to hurt the Russians, you're also hurting the EU. So the EU debt level is skyrocketing. I saw a chart of what it's amazing how just in the last year and a half how it is more than doubled, and it was already escalating at a very serious rate over the past few years prior to that, where it had maintained a relatively decent curve. Now, one of the things that's going to really come into, you got to think about this because this is very important. Germany has a big problem with inflation. It brought on a world war for one, and they've always kept their policies when they were sovereign to keep unemployment low and also to keep inflation held back at all costs. Number one thing, before they do anything, the one thing that they are out to is to protect themselves from inflation and not do anything that causes inflation. Well, EU controlled has now run amok, and well, the EU debt is exploding, and each EU country's debt is exploding. So it's just like in the United States where we have the national debt and we have state debts. Theirs is in the same situation, only they don't have the capacity, the GDP, or the resources to even remotely be able to maintain this, let alone not avoid any type of, beyond recessionary type of situation. Like, it's amazing how Germany was able to maintain things so well, and then now with joining the EU, this is what happens when you have a council running basically every country without their sovereign judgment being allowed to control things. So let's say we do breach this downward sloping resistance line. Well, then maybe we can muster up enough strength to hit this extended upside target zone. I think you're going to have a lot of issues trying to get above this $07.91 area where this last swing high was. It is a Fibonacci area on the longer term, this 50 to 6.18 right here in this area, but you're talking about on the major move of the trend, but that I just don't see that we have the fundamentals, especially because of these bearish influences. Technically, this market is oversold. Anyone can tell you that, but this is where when you have a trend that goes like this, the technicals, especially when it comes to trying to pick a bottom, which you shouldn't, they're going to fail you all day long. They're just going to get skewed and skewed and skewed. Eventually, there will be a bottom, but right now, we're looking at any type of upside move as only a corrective move whatsoever. All right. So right now we can see the market's trading at 105.64. Are we going to fail, or are we going to continue to move forward? Let's double check here. Okay, we got some good viewership going on here. No questions on what's going on here. All right, well, that is totally fine. We don't mind that whatsoever. All right, we're just getting into it. All right, so if you're not asking any questions, though, make sure you hit that like button and that subscribe button, and also share out the link for on Twitter and what have you. All right, so Euro US dollar, I got a feeling we're going to run out of gas here, and then we're going to come back and test support. I really believe that because of all these other extenuating things that I have to do geopolitically and what have you, that over the next couple of sessions, as we start to erode and fail to, unless we can sustain a trade and close basically above this $1.0626 area and above this downward sloping resistance area, I don't think you can confirm strength. I think that no matter what, we can spike in here like we've been doing, and even again today, we're running out of gas, folks. And let's see where the interest rates are. Oh yeah, okay, so we got the CME website. This is another reason why we do things, remind you about the delay. All futures cannot broadcast in real time, so giving credit where credit's due here. CME site, bonds are down over a point plus 3 ticks, so 1 basis point handle and 3 extra ticks, so that's 32 plus 3. That's because there's 32 ticks, not pips, to a basis handle, so that's down 35 ticks, or pips if it was a currency. The 10-year is down 17 ticks, so which is just under half of what that is, which is a relatively pretty much in the correlation. It's based off of the close from Friday, so the skew there is somewhere between a half a point and 2/3 to half as far as distance with that. All right, so that is negative right there, which is positive for the US dollar. Higher rates, definitely not good for the euro. We'll get into oil and stuff like that later. And all right, so right now we're looking for a test of that. Let's look what's going on in the British pound, US dollar. All right, British pound, US dollar, same situation here. We came into critical upside resistance here. This critical upside breakout area is this last swing high where we had this bullish engulfing line buy signal that shot us right through our target, shabam, within one extra session. And then we've gone sideways ever since. And I think that this sideways trade that's been bobbling around for the past week is a really good indication of how this market is, any rally is a corrective market right now. There is just not enough strength. Even though central banks are starting to raise their interest rates and start to get on the bandwagon with the U.S. Fed, not all of them are. They're also doing it in different fashions, and they're playing catch up. We know that within the next couple of weeks, we have another 3/4 hike with the U.S. Fed. I mean, unless something radically changes, but I don't think that the narrative from the Fed is going to change whatsoever. But you never know, right? So, but all right. So, any questions on the British pound or the euro? So, especially with this critical upside breakout area, if you have any questions about that, why that's in place, do not hesitate to ask. Now, you can see where we had the last swing low, where that bullish engulfing line buy signal occurred. Well, obviously, once we fall through that, that means that the trend sets a lower move low. Now, right now, where our critical breakout level is, that 124.13 area, that is our last lower swing high. So the trend is still your friend. We came off a lower move low. We've made a lower move high. We have failed to challenge that high. We've been going sideways. So now the question is, will we break out to the upside and try and lift the correction more? Or is this correction running out of steam? And is it time to basically say, hey, we're going to hit the new lows? I think that with interest rates hitting the way they are, the oil trade doesn't come into place with the British pound. However, the UK luckily has its sovereignty because of Brexit. Boy, I'll tell you what, if you weren't for Brexit and you live in the UK, I'm sure you are now saying, thank God it happened, because they would just be really crushed with the fact that the UK economy is struggling enough on its own. And since Brexit, they've already ousted out of having to come up with all kinds of funds for everything from refugees to all kinds of other things. Not that they're not taking people in from the Ukraine or whatever. However, they're doing it at their pace, at what they can handle and stuff like that. All right, so British pound, US dollar, looking to test support. If we fail from 119.28, which I believe if a sell-off down to this area will, it will compound, and I don't think it's as volatile as or as weak as the Swiss franc is and the euro. We'll get to the Swiss in a moment and see what's going on there. The pound has, because of its sovereignty and separation from the EU, that does give it a little bit of strength. Now, I still think it's bearish. I just don't think it's going to be completely in tandem. I would expect that you'll see more corrections as we move forward in the British pound, US dollar, and sustainable corrections, where you can see how we've bottomed, we've rallied, and we've chopped sideways, and then we had a violent sell-off. But look, we haven't pounded the lows so significantly. So below 119.28, I see us getting down to the 117.5, 118.20 area. And that, I think, will be a good bobbling area where we start to build another base once again. And we may even start to, as we get into the middle of the summer and we see these central banks start to come in line, where you start to not necessarily see the interest rate trade drive the trend as much as it does, because you're going to start to see a canceling effect. So, that was to remind me, by the way, for those of you that don't know, and I also do spots on tfnn.com every Wednesday at 8:40 Central Standard Time. You can catch them out on YouTube live every day, or definitely me on Wednesdays, but today I will be on there twice. I will be at 9:40 a.m. Eastern Time, which is 8:40 Central Standard Time, so not long after I'm done with this video, and then also 3:40 Eastern Time and 2:40 Central Standard Time, or excuse me, that's 2:40 Central Standard Time. So we'll be talking about the Forex markets, and they'll be, excuse me, asking me all kinds of questions, interacting with their audience on Tiger TV, and also we will be having some special news about a project that we've been working on together for the Forex community that we are releasing today. So if you want to know what that's all about and have a part of it, you got to check us out at tfnn.com today at 8:40 Central Standard Time and 2:40 Central Standard Time. I will be on the show. Normally I'm on Wednesdays, which I will be on this Wednesday again at 8:40, but we have a special announcement, and hopefully you guys will be there and have your friends show up too. All right, so let's go look at the US dollar Swiss franc, which this one was under pressure earlier today, but it bounced back. Now it doesn't look like it's done very much today, but it's because it's had such a big range. But right now it's been in a crazy wide range trade. Last week it kept on probing lows, but nothing very extreme. Ironically of it all, it was the only one that really trended. Remember, the euro was pretty flat, and the pound was very flat. The ranges were very tight. And I'll tell you what, it's amazing how, especially since the Swiss gave up their neutrality stance as far as when it comes to their banking policy, boy, their currency fluctuates a lot now. A lot of the EU issues are going to hurt them, not as much as some of the other currencies around there, especially the pound. Excuse me. The pound will not be hurt as much as the Swiss. The Swiss is going to have a very big impact because, one, it's in the middle of the EU. What it's willing to do for the EU and what kind of stance it's going to take is going to be very interesting. So we're in a reverse central bank war right now, and I think that it's not very long that the Swiss are going to come in and do a radical move. So when they do stuff, it's not like they don't spend a year raising rates to do whatever or cutting rates. They're going to pop it all bam at once. So when that happens, and that's why I always tell people, make sure you got your stops on. It's going to be an upside down trade for the US dollar Swiss. But right now, I think you have a very good buying opportunity of shooting up towards our initial upside target zone. Right now, we are keying off the low from Friday. This is our key support low. Coming in, we got our channel coming here, as you can see, drawing this up it's a nice angle here. It's basically a 45, which is a really good channel for as far as a trend to support a trend for a median average. So let's just say that we have found the bottom, a short-term bottom. Remember, we're not trying to bottom pick, but we've been trading lower for every single session except for one up until right now. We're basically flat on the day. So if we could get a bounce, and let's just say that we're not going to be a bull, but we're going to get a corrective. Let's say we're already in a bear market, which we're in a short-term bear trend, but not a bear market. Overall, this is a bull market. So we coming off this swing low here. I think we have the ability to get up to 97.86, 98.47. Now, with this volatility, it could happen today. I doubt that's going to happen. I think that we have, because of the holiday market in the U.S. and what have you, that we will see a solid trend forming here over the next couple of sessions. It's a little quiet today, but then the U.S. markets haven't really opened yet. You got the bond market that just opened, and you have the stock market that doesn't open for another half an hour. So, and then remember, 10 minutes after the stock market opens, what are you going to do? You're going to be watching me on tfnn.com, or you go to their YouTube channel and watch me on there. They'll have a live broadcast through YouTube. So, and we'll be talking all about this stuff. All right, so that's our initial upside target zone. If dollar strength seems to be prevalent and we get a move up to that area, use caution. I would say that you can, if you're long and you're looking to be a bear, not a good idea to get short there. Probably take profit. If you really are bearish, wait for a valid sell signal if you're going to fade any upside move. My prognostication, if you will, is that we will have this market trade through that initial upside target zone and test the highs that we've made in both May and June, and probably sustain a trade above parity for quite some time, at least until there's some sort of resolve with the Russian-Ukrainian conflict. I don't think a lot of people have quite the clue as to how this is really going to be impacting the markets moving forward. It already has been. It's setting trends. And as we hit these other cornerstones in this conflict, especially with not how it pertains to Russia and Ukraine so much as it does Russia and the rest of the world economically and geopolitically, well, it's not like putting sanctions on Iran. The U.S. and the world can put sanctions on Iran. It doesn't really matter. All that does is constrict a country like that. Russia has all the resources they want. They span 13 time zones. So most people don't know geography, they don't know history, and they don't really know much about Russia except for, bad B movies and that they're always the bad guy, unless it's the Nazis, whichever. But right now, Russians are the bad guys, and I'm not saying they're good guys by any means, but the way we're handling this is not helping us. It's certainly not hurting them, and we've been basically funding the conflict for the Russians. People may not like that tone, but guess what? Look at the value of the commodities they own, the stocks of gold they have, the fact that the ruble's worth more now than it was before the conflict. And so if there's sanctions, if you meant for your sanctions to hurt all these things, well, it ain't working. So you keep the sanctions going. That means that you're just being insane, thinking that the results are going to finally turn around and go the other way. Because guess what? They're not. And after tomorrow, especially, I think you're going to see if the gold market starts to really, really move, we're going to have issues. And you got to realize too is that a lot of countries now, they're dumping the U.S. Treasury bond market for gold. So I mean, it doesn't even matter where the futures go anymore. The cash bonds, they're gone. People are getting rid of them. They're dumping them. So and ways rights they should, because rates are going up. As rates go up, price of bonds go down. So all you people with your bond funds, good luck with that. All right, so if we have a failure from Friday's low, use caution buying into this dip. We have an extended downside target zone of 93.36 down to 92.77. This, I think, would be the ultimate extreme. The only thing I can see that would happen, or how we could get the U.S. dollar Swiss down here, would be if you have an interest rate rally, meaning that the 30-year and the 10-year notes start to move up in price, meaning down in yield. That in an extreme way, if we had a lot of buying. So what would cause that? Well, the only thing I could think of that would cause a wave, at least a short-term rash wave of buying that would precipitate a loss here in the U.S. dollar Swiss, would be, say, like if China invaded Taiwan today, or sometime in the recent future, or this nearby future. If they were to do that, we're in an environment where we would see an initial spike. I don't think it would be sustainable, and that means that even if we do get the U.S. dollar Swiss down to this extended downside target area, odds are it's going to bounce from there. So I would be very cautious. Big money has it pretty much where it's at right now, and parity is not something that's just my view. It's a view of many traders out there, and just because of all the geopolitical things and the fact that the interest rate market right now is dictating a stronger dollar versus the Swiss. So we'll see what happens. Remember that once we breach this 98.47, all bets are off on being a bear. This is not a sell rally forecast for this market. It is a buy dip forecast, and right now we're in a very good dip zone. You have a low risk buy versus this low from Friday. In fact, right now we're trading 96 even, basically, with the low here of 95.21. So you're risking 80 pips on a move that has the potential to rally from 96.03 up to 90 to make 180 to 200 plus pips, and that's just on the initial upside. So right now, very low risk buy. Once again, we're not giving you any suggestions. However, it is prime conditions for it. U.S. dollar JPY. All right, let's see. Oops. U.S. dollar JPY. All right, there we go. All right, let's see if we got any questions real quick on our YouTube here. We do not. Do we have a question? Nothing in the chat. We have a couple more likes. Thank you very much. Twitch, we got some good viewership here today. Thank you for the early show. Usually we don't broadcast this early. Trying to figure out what's good timing for you guys. At least the ones that like to watch us consistently. All right, so we had the U.S. dollar JPY. Okay, well, very interesting. We had a sell signal last week, a 3 inside down sell signal. And if you read my book, High Probable Japanese Candlestick Patterns, you'll find out this is one of my favorite ones. One problem with this though, it hit our initial target zone right off the bat. This is a very good, valid signal. It is a counter trend trade. You can see that the last swing high to swing low had a lot of volatility, but it lasted 2 days. 2 days. This also has lasted 2 days. Now today, the US dollar yen was under pressure for the most part. It's only since before we started talking that this market has rallied up and is now floating below its highs of the day. Very likely it's going to challenge 136.72. Higher move highs, higher move lows confirms what? It's a bull trend. This strong support zone, it would need to fail from here, 134.17. That would confirm a short-term neutral outlook and bearish correction in place. Doesn't mean that this market is bearish by any means. It is not. However, it has not had any sustained extended correction in quite some time. And also, we're also trading right now at, what is it? We're trading at 135.5. We're trading $4.50 above where the Japanese put a line in the sand a couple months ago, meaning that they would defend their currency and do all kinds of stuff. Hey, we got a little first-time chat, easy and simple. Thanks, great. Appreciate the comment, man. Glad to be of help. If there's any pairs you want to talk about, just pop in there on the chat and we will take a look at it. So thank you very much for the comment. We always appreciate the support and the compliments, without a doubt. So, all right, so we have the strong support zone. Once again, it would have to fail from 134.17 to confirm an extended correction down towards this 131.69 area. That is just above our last major swing low here. If we took it out, we have this 0.618 retracement level of $130.38. This is going off of this major swing low here to this last major swing high last week. If this 3 inside down sell signal is the beginning of a corrective wave lower, it could be. I mean, right now the market's rallying, but it's still much lower than the high was last week. It's in big sideways if you look at the past week of trading. Actually, today's Monday, here's Friday, Thursday, Wednesday, Tuesday, Monday. Well, for all intents and purposes, the market just gyrated and ended up basically going nowhere. It's only slightly higher. If we challenge this, obviously, we've already hit our short-term target. This would be a longer-term extended target. This is not this extended downside target zone for this signal is too far to reach, but for the signal here, especially with the way it's so dramatic in its sell-off, and then now it's trying to hold here at this key support area, tells me that there's still all the factors in place that are holding up this rally. So I would use caution. If you're going to sell into this move, make sure that you are not still short above 136.72. I don't care if it just spikes up. This has been just making highs by not even a full point. It could just go up 20, 30 pips through it and then be chopping around here, but it's going to grind you out. Eventually, you're going to get stopped out. You're going to take enough heat and be like, oh my gosh, why did I weigh my risk and play it smart? So use caution. You are in a bull market. Any type of sell trade you put on right now, remember, is a counter trend trade, and you need to use caution and be mindful of your risk. Not that there's not the potential for a big correction. Anything could happen. Remember, the Japanese could come in and jump in. So, all right, you are trading style. Thanks. Okay. All right, so that's our levels there. Now above 136.72, where can we go? Well, I have 140 right now as a short-term target to hit over the next 3 to 4 weeks. And I have 145 to hit by the end of September. So this is without any intervention. Right now, with the aggressive move of the Fed, especially once they pop the rate another 3/4 of a point, without the Japanese doing anything, that and alone would be within 2 months, actually really in just over a month, a 1.5% differential in strength of the dollar versus the yen without any intervention on the Japanese half. All right, so that's just my tone to make sure I'm being mindful of how much time we got here for this webinar. Remember, you're going to see me on TFNN later. All right, so right now you can see the Japanese yen is poised to take that out, and we gave you a little downside target. We are a bull. We have been. Anyone that's been following me knows that I've been basically net long this market since last summer, except for a couple of days. And that's literally been a couple of days. All right, now let's get to the Aussie. All right, this one's been a tough little grind the past week and a half. If it takes out that last swing low at 68.52, it's going to keep grinding lower. There's a lot of reasons that this market could catch a bounce. One of the biggest would be orders from China if demand would be there, but with supply chain things locked up and things closed, and I guess maybe coming out of lockdown, who knows what's going on. In Shanghai, it doesn't matter. It's where the factories are across the country that matters, and the demand for the raw materials from Australia. So a lot of issues with that. Their central bank is starting to play with some things, and that's probably one of the things that could keep this market from selling off drastically versus the dollar. However, the trend is still your friend. I believe that, you can see by attrition we're coming out of this wedge here. So if we continue to go sideways, if we can breach the last swing high, I still think we're going to have trouble here, because at 70.70 to 70.73 you have the swing high and you have a Fibonacci number here. 71.19 I believe would most likely cap any upside corrective move, if it's just a corrective move, and we're going to, at least if we stay in a sideways to lower trade, this should pretty much end any rally. Should we exceed and close 71.19 and maintain a trade up towards this area here, 72.58 to 73.5 is a really good extended upside target zone, but I don't see it being able to sustain those levels. So be careful, especially if we get a run up that's really sharp into that area. Should that occur, very likely that it's going to fall off, kind of like what we saw here, where it exploded radically as a corrective move to the upside, and then boom, see what happened? It basically collapsed in the same amount of time, and the same amount of volatility as well. So those are our numbers. If we do go below 68.52, then yeah, I think that 67.15 down to 66.80 is going to be probably where you're going to see this market try and extend down, and then I think it'll base. It'll do something like what it's doing here, where you're going to start to see corrective swings. You're not going to see it kind of be like the euro or the pound, where it's boom and then just goes sideways and then falls off. This will actually give you a nice trend, suck in a lot of weak buyers at the top of the correction, consolidate, make it look like it's going to be something, and then poof, the rug's going to be ripped out and it's going to fall very, very quickly. At least that seems to be the way it is trading right now, and I think the forecast should say it's going to remain the same. So we have two more Forex crosses for you before we get to the cryptos. Let's see if we have any questions or comments on YouTube and Twitch. Got another like there on YouTube. Thank you very much. And on Twitch, no more comments, but we do have it from our nice new friend here who left a couple of comments for us. Thank you very much. All right, so New Zealand dollar, US dollar winding its coil, very similar to Australian dollar. This one, I think, is a little bit more hard-pressed, meaning that I don't see rallies being as sustainable as Australian dollar, and I see breaks really pounding lows much more significantly and hanging down there. So this one is weak. It has a lot more issues fundamentally and technically, as well as geopolitically, and especially with a lot of their they're imposing newer lockdown and COVID measures there, and restrictions. So that's really putting a thorn in their economy and getting things to jumpstart. However, should we take out the swing high from a week and a half ago, I still think you're going to have trouble all the way up to 64.30. You're going to need to settle above here and maintain a trend to even remotely give us any thought that this could really possibly get up to 65.79, let alone this extended upside target zone of 66.12 to 67.14. This would be should we have some major turn of events. That's why we have these target areas. If we weren't in the type of markets like we have now, if we never had COVID or any of these like ridiculous lockdowns or any of the war things going on like we have now, then I would say we have a very viable chance of bouncing up to these areas, especially for the New Zealand dollar, US dollar. Not so much now anymore. Now I think you're going to you're going to fail to pull off a rally and end up falling below 61.94, push it down towards that 60.70 area, and 60.70 area down to 60.45 area, and then I think you'll find some support in that area. So in tandem with the Aussie, but not quite as strong. All right, critical resistance for the Canada lay is just below these last two swing highs. You can see we made a lower swing low today, but now we are up on the day. Still not very positive right now. It's a big, nasty range trade, and now we're buffering at that upper zone. I mean, maybe we can trot through it, but I would use the last swing high and the last major swing low here. This $28.57, a failure here, keeps us in this short-term daily downward trend that puts us in this critical support zone of $27.97 down to $27.32 extreme. It's big sideways. This market is going to be a chop fest. So right now, I think you can catch this trend. Use caution, and if it gets into this area, keep your stops tight. Be very mindful of buy and sell signals in this market. Fundamentally, technically, it's a nightmare. So the swing trade is on, but it's very, very wide. I would say trade the extremes and don't really expect much follow through with this market. You know, I mean, I think that you can bobble from this highest range to the bottom, but as far as breaching this area, if we do, I think you're going to fail. Be very cautious trying to be bullish, and even being bearish below this area here of 125.18. I think for the most part, we're going to snake along and be contained in this. Big sideways is the call. All right, let's take a look at Btc USD. All right, so we have the Bitcoin US dollar. You can see that this market here has been, well, it's not doing so great. It's going sideways. It bottomed. This thing right now, I think, is you're just going to have to ride it out and wait and see. As far as could it make lower lows, well, right now it's still trending, making lower move lows and lower move highs. It has some room to the upside. Isn't sustainable. Anything's possible, but right now I think the whole crypto space in itself, it has proven itself to not be a hedge for inflation, that's for sure, and a couple other things that everyone's touted as being the savior for people when it comes to economics and what have you. Obviously the economists got it wrong again. So there is no value right now perceived in it, and it's under pressure. So right now I've used caution. I would look to fade rallies up to 25,000 to set 2750. I think that this lower end of this range where we traded in for almost 2 months, that you'll see that as being resistance. Remember to spike here. Could we get above that area here of 25,457? Yeah, but I don't believe it's very sustainable. I would key off with some other cryptos in the space. Now, Ethereum seems to be less of a trying to continue to scrape the bottom type of market. This one here, short term, is making higher move highs and higher move lows. It's trying to get positive on the day. Can it maintain itself? I don't know. It's an upside correction right now. We don't have any signals in place. However, at 1,200, 1,000 to 1,200, where it's been trading the last week and a half, it's pretty much fair value for Ethereum. With at least if the cryptocurrency and the technology is maintainable and sustainable, then that's a very fair value. Up to about 3,500, 4,000 is already getting expensive for it. I know people want it to go to $1 billion, just like they want Bitcoin, but markets just don't behave that way. And the technology comes at a cost, so the value diminishes as it becomes a store of value, if you will. But ETH USD right now, I think you're going to have more big sideways. I would wait on this one. If you can get a chance to buy a dip, I would do that. But wait for an extreme. Don't just wait for an initial one-day sell-off. Excuse me. So the question is, how far can we go? Well, if this market really is going to maintain its bearish posture, well, then I think we still have a chance of touching down towards 800 in this area here before we go up to the 1600. So we will see how that pans out. All right, now let's look at Xmr US Dollar. This one was giving us some more faith than the other currencies with its corrections. and it's doing it once again. Now, still the value here is very, very low for where I have it as far as a longer term value. However, the trend in most of the cryptocurrencies is very bearish and under a lot of pressure. The thing is, this one is trying to make a move. It's trying to do something. So this one, just like Ethereum a little bit, is well, they have technologies that are embraceable and usable. As far as Bitcoin, the only thing that's really usable is about the fact that the blockchain technology is usable, but to a degree. So Ethereum, however, and Monero for transaction purposes have started to really fit into a mainstream situation where they can meet it. Is it sustainable? No. The technologies, no matter what, are going to get wiped out by quantum computing. But at least in the short run, they are very sustainable. So Monero right here at $1.27.67 is in a very good low risk buying zone for this cryptocurrency. All right, now we got to take a look at something and see how this one fares. The Doji, we love it. Look at it. It's all the way up to 7 cents. We got down to, what was the low here? The low was just over 5 cents, 5.27 cents. That's pretty crazy. And now it's up 50% in just a week and a half. So just think, if you would have spent a nickel, you'd be up 2.5 cents. So you would have made 50% on your money in a very short amount of time. So, and this is definitely a buy dip scenario. I would use caution. Or not, excuse me, it's not a buy dip scenario. It is a sell rally forecast. So if you are looking to, sell out of it because you're long, well, then I would say, okay, yeah, look for some rallies to dump out of your stuff because it's probably going to go make newer move lows. Right now, the trend is your friend. Lower move lows, lower move highs are constantly pushing it in that direction. All right, Euro US dollar. Once again, see where we're at. Okay, so this one, yeah, it's not holding up in that critical upside breakout zone. Once again, I think it's going to run out of gas. We're going to see that Dixie start to gain a little bit of strength over the next couple sessions. Am I bullish? Remember, like I said earlier, it's not that I'm bullish the dollar index so much as I am that bearish these other currencies. So we'll see how it pans out. Very interesting. Let's see if we have any questions on YouTube or Twitch. We do not have any questions on YouTube or Twitch. What do you know? All right. So with that being said, we want to remind you to subscribe to our YouTube channel, our Twitch channel. Make sure you please hit the like buttons and share buttons, and also make sure you come back and visit us again as well. And if while you're at it, check out Forex Trading Unlocked's YouTube channel, our playlists that are on there. There's a lot to offer for you. We have stuff from TFNN that we do from our spots on Wednesday. We have webinars we did for the Nadex, for binary options, eoption.com, and all kinds of Forex videos also for you. And also, one last note, check out the book High Probable Japanese Candlestick Patterns, written by yours truly, available on Amazon.com in paperback and Kindle versions, and learn how to trade those Japanese candlestick patterns. All right, I'm Teddy Keckstedt from Forex Trading Unlocked. I want to say once again, thank you very much for your time today. Good luck in all your trading endeavors. Make some money. Start this week out well, and be careful at the end of the week because we do have holiday markets coming up next week. So, but Friday, you can be rest assured. Thursday afternoon into Friday, it's going to be a very thin market trade in the U.S. because you have the holiday weekend. I'm sure a lot of people are taking off, me being one of them. So, all right.